Well, the British-American investment company over in Kenya this morning launched its 2010 Investment Outlook report, giving investors an overview of key developments in the political, economic and financial markets, as well as insight into topical trends or events that will shape the country's investment market this year. To run us through some of the highlights, Onchera Maiko, General Manager at British-American Asset Managers, joins us now from our studios in Nairobi. Thanks so much, Onchera, for your time this afternoon. Well, despite some of the activity we're seeing right now on the market scene, where foreign investor activity has seen a major fallback this week. I mean, it accounted for just 14% of yesterday's equity turnover. You're optimistic about foreign capital inflows into equity. So on what basis?
Thank you. The basis for our optimism is not short-term. It's based on an improvement of the local situation. You have to take us back to what the nature of the problem was. And the fundamental issue in Kenya has been, is there a political dispensation that can take us to 2012 and beyond? And the tentative answer is yes. As you know, or probably might have heard, last week the major political parties in Kenya agreed to a new constitutional dispensation that is expected to come through before the end of the year. That's the first major hurdle. The second hurdle was that of enacting an economic policy that makes long-term sense. Now, what the government has committed itself to is an infrastructure development program. It's not moving as fast as everybody would like, but it is in place. Last but not least, we believe that the local investors have for the first time taken a more positive direction since the troubles of early 2008 and the global credit crunch. Now, as for the foreign investors, our belief is that this is a short-term blip based on technical conditions in global markets, but they have expressed strong interest in certain markets in Africa, including Kenya, given that our PE ratios are reasonably valued, and it's expected the growth will come in at a decent 4%, which beats the 0% they're earning on fixed income assets in the US and some of the other markets they look at.
Let's take a look at the broad economic policy that governs the markets right now. I mean, the IMF has raised a question about monetary policy, saying that it would possibly need to see some revision in Kenya. Do you share this sentiment? And example and case in point of where this hasn't been working is where the Central Bank of Kenya has been reducing its lending rates on the one hand, and banks responsible for increasing liquidity into the market has been holding interest rates pretty high, hindering some of the growth prospects we could well be seeing in the Kenyan economy.
That's a very good question. I think it has two sides to it. One is short-term and one is long-term. I think the short-term challenge has been around confidence about economic growth. So while the central bank was lowering rates with the view of increasing bank credit creation, i.e. lending, the banks themselves have been hedging. And some of the things they've been waiting for are the things I talked about. One, they can't say that publicly, but I believe that what they were looking for is direction politically in the direction of a new constitution, and they now have that. And the second thing is the so-called green shoots. So that's in place. So I expect a short-term uptick. Now, I think the concern of the central bank, expressed publicly many times by Governor Jogona Dungo and also the IMF, is that the transmission mechanism is not working as well as it should. That is a structural long-term problem that should not fail to deliver 4% growth. So what they have done is to set up a working committee that involves all stakeholders, the fund managers, of course the bankers themselves, and the central bank, and a couple of other thinkers, to ask what is the reason why this transmission mechanism doesn't work as well as it should. But I think what that would do would be to address long-term impediments that need to be taken care of that would push the economic growth rate higher than 4% to 6, 7, possibly 8%.
Well, in the meantime, while they work that out, we've seen the fixed income side of things gain a lot of attention in Kenya, gaining momentum. Do you see this detracting attention from the equity space pre-economic crisis and pre-post-election violence? The kind of activity and interest the equity space received before those incidents?
Yes, I think I've heard those type of questions. My view and the view of British American is that there actually isn't really a conflict between the two markets as such. The issue has been short-term, or 2009, that a lot of investors were wary of equities given their not so pleasant experiences in late 2008. Now they got an affinity to the local bond market. The structure of that market has improved. There's now automated trading, so that should continue. Those are long-term efficiencies that were put in place. However, given what you said, the central bank, despite the lack of transmission, has been systematically lowering, not a dramatic event, but very systematically lowering returns on government paper, and that will go through and is going through. When that happens, our sense is gradually, investors, very gradually, during this year, will realize that the returns on bond markets have gone down, and they will start taking a closer look at the equities markets. And when they do that, they will discover that there is value in certain sections of the market based on PEs, and based on the fact that most earnings have not taken a hammering. In fact, there probably might be some poor or relatively average profit results, but those reflect 2009. So with GDP growth at 4%, on average, you can find companies that show value.
There are other emerging investment vehicles to consider here. Of course, we've had the country's real estate sector being dominated by high net worth individuals and institutional investors. But with that being the case, we've seen now the emergence of real estate investment trusts, and that could aid the accessibility of the real estate market to smaller investors. What do you anticipate uptake to be like on that front?
In general, Kenyans have a passionate relationship with land, real estate, etc. So in principle, it doesn't need introduction in the way that securitized equity markets, etc. do. However, the exact timing of the start or launch of the product will dictate the specific numbers. But in general, our interaction with investors has been very, very optimistic. Our sense is that the immediate opportunities are in the lower and medium-sized sides of the market that have been neglected by the real estate investment activity over the last 5-6 years. So we expect that there will be strong uptake. The issues will really be one of structure and how to make access for investors efficient and cost-effective.